Ben Ayers, senior economist nationwide. Ben, happy Friday. Thank you so much for joining us this morning. Let's start out with big picture takeaways from your point of view from the jobs report. 143,000 jobs added to the economy in January. That was less than expected, but the unemployment rate ticked down to 4%. The expectation was 4.1%. What's your take first?
Now, top level, it's a solid report. 143,000 is in line with estimates. There were upward revisions to the previous 2 months, so the pace of job growth is still very solid here in early 2025. I think it's a continuation of some trends that we saw over 2024 where things have narrowed a bit. If you take out government jobs, take out healthcare, two areas that are not as dependent on the cycle, the more cyclically sensitive areas are slowing down in job growth. But again, still a solid number. I think the biggest takeaway for me is what this means for the consumer. The consumers continue to driving economic growth, and with a really strong gain for average hourly earnings and wage growth over the past year, still at 4%, there's still a lot of momentum for consumer spending activity here in 2025.
And then the labor force participation rate, a tongue twister there, 62.6% for January. What's your thought on that?
We're putting in some new numbers for the population, so that certainly had an impact there. But, that continues to tick higher, and that's a good sign that more workers are engaged with the labor force. Again, that's adding to incomes, adding to consumer spending power, and with most of our growth still coming from the consumer, that's a great sign that we're going to see continued growth here in early 2025. We're expecting about a 2% annualized growth rate for GDP, which is pretty much on par with what we saw for Q4. So the beat continues to move on in a positive direction.
When you think about where the gains are, the gains were led by job growth in healthcare, retail, social assistance, but you saw some job declines in mining, oil and gas. What are your thoughts on that? Obviously, we know healthcare continues to be a strong segment of growth when it comes to employment. Do those trends make sense to you? Are you expecting to see any growth in oil and gas, for instance, this year?
We would expect to see some growth in oil and gas, just given the change from the Trump administration and what their focus is this year. But, broader trends would suggest that we're continuing to shift towards a service-oriented economy. And we're seeing that in the jobs numbers. Some of these sectors are still right-sizing from impacts over COVID, even going back a couple years. And so we continue to shift away, and that's where people are spending. They're spending on going out to eat. They're going out and spending at retail stores. And then those firms need to firm up their staffs to catch up with that. So we're still seeing that trend continue, likely to extend through the course of 2025 as well, as we just see consumers continue to focus on the service sector.
And then, Ben, government employment grew by 32,000 in January. That was pretty consistent with the patterns that we saw last year on average. What do you make of that, especially in the context of some of the cuts that are coming in the Trump administration?
I think much of the increase was actually more at the local and state level and not at the federal level. So we haven't seen any impact of what's happening in Washington yet. That does place some downside to the growth that we'll likely see from the government sector from here on forward. But that's still a pretty small part of the employment picture. The private sector, where most people are working, is doing quite well. And that's what continues to drive growth. We're expecting, a little bit slowing of job growth as we look out over 2025, but still a pretty solid pace, and should continue to keep the economy moving in positively.
And then, Ben, you talked earlier about the revisions. December was revised up by 51,000 to 256,000. November also revised higher. That was revised up by 49,000. That makes November 261,000. Obviously, that continues to show that we have a strong job market. How do you think the Fed reads through with regard to this and their plans for the path of interest rates?
talked to, they're on pause right now, and I think this number probably supports a continued pause because they're not seeing any strong deterioration of labor market conditions, which means they can focus a little bit more again on inflation. Inflation, we'll get that number again next week for the CPI. I think that's going to be very important. But, we have a lot of uncertainty on the price front, both for consumers and businesses. We don't know what tariffs may or may not come through. So the Fed's keeping a very close eye on that. And I think this is a report that says, yeah, we don't need to move in March. We might not even need to move in May because we're still seeing very positive trends from the labor market, from consumers, and they can probably stay on hold for a couple more meetings and continue to assess the impact on prices to make sure they're getting that under control.
Ben, I want to get your take on one metric that doesn't get a lot of focus often. That's the long-term unemployed. That people who are unemployed for 27 weeks or more. It's at 1.4 million. That didn't change much from the prior month. That makes up a little more than a fifth of all unemployed people. Now, I know we have this strong job market, but also given the plans that the government has with regard to immigration, how likely is it that we could see that converting to some job gains in that? Or is it a question of the skills gap that I hear from some executives? And given the type of economy that we have now, you just mentioned earlier, we have more of a need in services. We're not so much a manufacturing economy anymore. What are your thoughts?
I do think the biggest factor there is the skills mismatch. You have a lot of jobs that are tech oriented or require a lot of training, and we're just not having the people out in the market right now that have those type of skills. I think you could see a little bit on the margins where, if say a restaurant area or something else in the lower skilled sector would need some workers over the course of the year, that you might see that unwind a little bit from a long-term unemployment perspective. But I think unfortunately most of it ties back to the skills mismatch. When you look at survey readings from businesses, they tell us that it's still hard to find people that have the necessary skills that they need. We are seeing some softening of labor conditions, and that will likely mean there's more opportunities for many of those folks who have been out of work for a while. But I don't expect that to unwind overnight, and probably a continuation of that when you look out over 2025.
All right, great insight, great perspective on today's jobs report from the government. Ben Ayers, senior economist nationwide, thank you so much for joining us this Friday.